where we bring together some of South Africa's most brilliant minds in the economic and market commentating space to unpack, debate, and challenge the implications of the minister's budget speech for our economy, our business, and our future. Just a few days ago, the medium-term budget policy statement was tabled. And what we heard was far more than just numbers. It was an outline of trade-offs, tension, and the sheer audacity of the economic challenge facing our nation. I can feel it in this room. The air is thick with anticipation. Will the focus on fiscal consolidation finally yield growth, or are we simply delaying the inevitable reckoning? A profound thank you to our phenomenal panelists of famous economists and market commentators. Let's give them a round of applause. Our esteemed moderator, Jeremy Maggs, as well. He'll come on stage shortly and introduce our panelists. Let's give him a resounding round of applause. Thank you both to Jeremy Maggs and our esteemed panelists and our CEO of Regenesys Investment Fund for hosting this function, Annatjie van Rooyen. Your presence here is a testament to the importance of this debate. Thank you for setting time in your very busy schedule to share your brilliance and, most importantly, your unvarnished truths with us. Let us give them another round of hearty applause, people. So why am I here when there's Jeremy Maggs and all these invaluable economists? I also would like to take this opportunity to introduce the heart of this organization, Regenesys, and the Regenesys Investment Fund. For those of you that are new to our community online and here in the room with us, we are Regenesys. And we are more than just a business school and an education institution. Our mission is to awaken the potential of individuals to become conscious leaders who make a worldwide difference. We believe that true leadership doesn't just lie in IQ, but emotional and spiritual intelligence. Not religion, but the ability to find meaning, purpose, and to act with integrity. The philosophy of conscious leadership guides us in everything we do, including our presence in the financial ecosystem through the Regenesys Investment Fund. This fund, headed up by Annatjie van Rooyen, is our commitment to achieving not just financial freedom for our employees, our students, and our clients, but to driving ethical, sustainable investment that contributes to the very economic growth that we are here to discuss today. For us, investment goes beyond profit. It's about awakening the potential of the markets themselves. Today, we are moving beyond headlines. We are here to tackle the hard question. What are those questions in your minds right now? Is the structural reform path fast enough to outrun the debt trap? Where are the real green shoots of job creation? And most provocatively, are we mistaking austerity for discipline, or is this the bitter medicine our economy truly requires? I want to issue a genuine invitation to our esteemed audience, you. You are not here just to fill up the room and be spectators. You are here to challenge perspectives. Please leverage every opportunity to engage. This is a space where we must be prepared to be provoked, to have our assumptions shattered, and most importantly, to agree to disagree. Critical debate is the oxygen of progress. True economic strategy is forged in the fire of opposing, yet well-reasoned ideas. So let the robust debate begin. Let the insights be sharp. And let us all leave here with a clearer, more inspired, and more critical understanding of South Africa's financial future. Over to our well-renowned Jeremy Maggs. Thank you, and let's begin.
Indrani, thank you very much indeed. Just please be careful getting down there. Many years ago, I stepped onto a stage in front of an audience of about 1,000 people. You know that when you hear your Achilles tendon snap, and they just applauded, which was the worst thing that ever happened to me. Indrani, you said that there were brilliant minds. I'm going to introduce you to the brilliant minds in just a moment, but for the next 30 seconds or so, you have to deal with me, I'm afraid. As a non-economist, let me try and set the scene for you. So the mini budget was aimed or delivered yesterday, I think, with an aim of reassuring the markets, but also keeping some faith with reform and growth. And I think the Rand is a good indicator of that, seems to have responded positively. On my screen, I've got it at around 1707 this morning. I think that it was unexpected, or not unexpected, it was expected, that the minister would announce this new inflation target of 3% with a 1-point band. That's signaling, I think, a more disciplined monetary stance aimed at lowering long-term borrowing costs. I suspect that the panel will get to that in just a moment. And also public debt is expected to stabilize, as you would have heard yesterday, at around 80% of GDP. So it certainly did carry a note of optimism. Looking at a number of scorecards on the budget yesterday, everyone ranking at about anywhere between a sort of a 6.5 and an 8 yesterday. Be interesting to see what the panel says about that. But I also think it poses some tough questions. So one, as Indrani pointed out, can we maintain fiscal discipline without stifling growth? I think that's critical. Most importantly, and particularly with the G20 just around the corner, good luck navigating Santon in the next couple of days. Can reforms in energy and logistics actually unlock productivity? We need to see evidence of that. And are these policy shifts that were announced yesterday actually going to translate into some kind of investor confidence, job creation, and most importantly, for South Africans, opportunity on the ground? And I think, or I hope those are some of the questions that we are going to explore this morning. So first of all, let me introduce the moderator of the panel, Melissa Tighy, who is a business anchor and producer at eNCA. A journalist, she's got a sharp eye, she's got an understanding of how economic policy plays out in South Africa. She's going to lead the conversation. Melissa, please come up and sit wherever you feel most comfortable. Annatjie van Rooyen, you've already heard her name, okay, CEO of the Regenesys Investment Fund. Folks, this would be your cue to come up as I mention your name. Thank you, Annatjie. Okay. Kearabilwe Nonyana, head of scope at Prime Africa. Are you with us? There we go. Okay. Well, congratulations on that. Bianca, if you'll join us, please. Bianca Boertes, advisory partner at CITADEL. And then Odwa Magwentshu, who is a portfolio manager at Momentum Securities. And then one of the most respected voices in commentary and analysis, and certainly a recognizable voice when it comes to radio and television, Wayne McCurrie, a restorer of fine old cars now. If you've got a Jaguar that you need restored, he's the man to talk to a little bit later on. Melissa, I'm going to hand it over to you, and we look forward to oh my God. Koketso. We have Koketso. Oh my God. See, you get to a certain age, Koketso Mano, senior economist at FNB, when your glasses don't work. Thanks for pointing that out. I'm straight to the optician after this panel. Is that everyone? Okay. This is the world's biggest panel. Good Lord. Okay. There are a lot of people there. So folks, what we're going to do is Melissa will lead the conversation. And then at some point, I'm sure you'll throw over to the audience, and I'm sure there'll be some very interesting, challenging and provocative questions coming up. So good luck, everybody. Sorry, I almost forgot you. Okay. Okay. I think we just need to.
Good morning, everybody. Thank you so much for joining us here for this budget panel. As Jeremy, I'm a non-economist, so I'm going to give it over to the experts to really tell us what's going on with this midterm budget. Annatjie, let's start with you. let's get the big picture here. How would you rate the medium-term budget policy statement? Very interestingly, S&P, the credit ratings agency, will put us under review tomorrow. Is it enough to sway credit rating agencies?
Thank you, Melissa. I would actually rate this budget a 7.5. I think it was very positive. The fact that the positive points were represented by that lower inflation target, the debt stabilization, the fiscal consolidation, but also very importantly, that move away from consumption expenditure towards infrastructure investment. I think the rating agencies will also view that as very positive. The fact that new debt issuance has been placed on hold, I think the ratings agencies will also view that in a very positive light. The fact that Treasury has also now endorsed that 3% target is very positive. That's convergence of policy. They're also accepting a 1% tolerance band to absorb any possible shocks. So I think the first question people ask is, will we see more interest rate cuts because of that 1% tolerance band? I'm not sure, because the Reserve Bank's very committed to their 3%, but be that as it may. We also have the debt to GDP ratios looking a little bit worse, but that is just because we were expecting lower nominal GDP growth. It's not to say that nominal GDP growth will be lower, but it has been factored in, so that pushes up the debt to GDP this year to 77.9 from 77.4. CPI has been projected with the previous budget in May to average 4.1. It's now come down to 3.5%, which is very positive. So that lower inflation expectations being anchored in, and I think that's very positive. On the revenue side, we're going to see a 20 billion rand overrun. That can be even larger with this commodity cycle that still has legs. So that I view is very positive. On the expenditure side, he asked for another 15.9 billion, of which 4 billion will go to SARS to enhance their debt collection efficiency. So all in all, I think very positive, and I think there's definitely an opportunity for the credit rating upgrade.
Koketso, if we get to you now, let's get to that 3% inflation target. I think that is what we all want to hear about at this point in time. Now, SARB Governor Lesetja Kganyago has said many a times that this will boost the economy. How will this be realized, even though in the short term it could potentially hurt our pockets? And I think I'd like to add to that question and say, do you think we're going to get a rate cut this month?
I'll start off with the easy one. Probably not. Our assumption is that you probably don't get another rate cut this year. Simply because of what you said, the Reserve Bank would like to anchor inflation expectations at 3% over the longer term. And that's going to take a bit of time. I mean, if you look at the inflation expectation survey that is conducted by the BER, for example, you will see that inflation expectations are more anchored at 4.5%, which is something that took a bit of time for the Reserve Bank to achieve. You would remember that they shifted to this 4.5% point target in around 2017, 2018. And since then, it's taken a bit of time for you to see inflation expectations actually drift towards this 4.5%. What's been interesting also when you look at the inflation expectation survey is analysts have shifted already, right? So since the Reserve Bank governor announced the 3% preference in the July MPC, you would see that analysts were very quick to shift towards that. So what's actually pulling down inflation expectations at the moment are analysts, but we are not price setters. We may influence price changes, but it's the businesses, it's the trade unions that also have to buy into this 3%. So unfortunately, it is going to take a bit of time. That's why the Reserve Bank is working with a 2-year implementation horizon, and with this 1 percentage point band to allow for any shocks that can occur during an economic cycle. So we do think it is going to happen by 2027, 2028. It's just interest rates have to unfortunately stay put for the meantime, just to allow for those inflation expectations to be guided downwards. And then when you speak about near-term costs, we know that there will be nominal near-term costs. So for example, if you're still going to negotiate your wage increase, that might be something that comes in. And unfortunately, for households that have not been able to claw back the losses that were incurred during the post-pandemic period, that will be an impact. And also we know the fiscal challenges that have also been presented as well.
Thank you, Koketso. Kearabilwe, let's head to investor confidence. Do you think this budget plan will drive investments in South Africa? If we look at the debt to GDP ratio that Annatjie also mentioned, the 77.9%, it's not really a confidence building number.
Well, comparatively speaking, I don't think we have high debt levels, and that's just on economic theory and the study of economic theory throughout history. I mean, I come back to a saying by Desiderius Erasmus. He says, in a kingdom of blind men, the one man who can see is a king. And for me, what has really been concerning for me in the investor confidence space has been the analysts who, as Koketso has been saying, that they've been saying that we have high debt levels. But yesterday, when I was reading reports, they said they were concerned about debt trajectories. So which one is it? And I think for me right now, yes, trajectory is seeming like it will top out in the medium term to top out about 80% of GDP, with estimates now at 77.9% of GDP, which is relatively low when you look at the fact that we are a developing economy. But right now, when we look at everything that has impacted investment, everything's looking up in South Africa. I mean, you're looking at our bond yields, they've gone from north of double digits, now they're trading in the midpoint of 8.5. You're looking at the JSE sitting at all-time highs. You're seeing all through reports, and you analyze your reports, even in sectors which are not supposed to be doing well. I was looking at Omnia's results. They were reporting 900 million in profits, even though chemicals is just a bad place to put your money at the moment. So in terms of investor confidence, right now it's the best place to be. I think South Africa is a good place to be for any investor or any capital flows. And as Jeremy said, you've seen it in the rand, you can see in the bond market, you can even see it in digital assets. I mean, right now with the purchase of the Sava Pay Inc., I think maybe there will be some development of some crypto backed with the ZAR. So I mean, right now for capital, we're all smiling.
Well, let's stay with market and currency reaction, Bianca. We saw that the budget plan was received quite well. I think the JSE closed more than 1.5% in the green. The rand's base level was at 17 rand 4 cents. Do you think we could break through that 17 rand? And what other market reaction did you see?
So I think it's important to just have a little bit of context as well. It wasn't just on the fact that we had the midterm budget policy statement yesterday. The South African financial markets have actually been performing really well. The rand is up about 1.8% for the week against the dollar. And that also filtered through into other major currencies. So over the course of the week, we have seen improved sentiment. And yes, that has led up to the midterm budget policy statement. But there's also other elements playing a role here, like the gold price, for instance, underpinning the rand, contributing to the JSE performance. As Melissa highlighted, the JSE closed 1.5% stronger yesterday. And that was mostly driven by financials, funny enough. We've seen quite a bit of performance in the PGM sector, but financials really did well yesterday. And that shows us once again that this fiscal consolidation, the interest or the inflation target being adjusted, is being well perceived by the market. Yesterday, the rand performed quite well. I think a lot of the performance that we would have expected was a little bit capped by a rally that we've seen previously in the week. We rallied about 0.5% against the dollar yesterday. But overall, the market is optimistic about fiscal consolidation, inflation expectations, and definitely the bond market was the biggest winner of all. We actually saw bond yields plummet yesterday. And if we look at overall performance in the bond market, yields is actually compressed by 36 basis points over the year. And that really tells a story of enhanced sentiment towards South Africa, not just on the back of the midterm budget policy statement, but also other effects that we have seen playing a role. And I think it's important to take from the midterm budget policy statement that they did say that the commodity run played a very big role in the revenue collected. And we should never make the mistake to think that this is something that we can rely on the future. We should adjust accordingly and make sure that we don't sit back and now become complacent because we've achieved these results. What also impacted on currency markets and the greater market as a whole is the removal from the FATF list. That is really the first step to saying we are here, we are open to investment, and we are a safe environment to come to. So not just from a yield pickup perspective, but really a place where you can come for fixed capital formation, not just portfolio flows, and we will take care of your money, we will take care of your investment, and we will make sure that it's managed in a prudent manner.
Thank you, Bianca. Odwa, to you now. Okay, so in the bigger scheme of things, there's a lot of things driving the markets at the moment. So not that much weight on the midterm. How much of a weight would you put on the local elections next year for market movements to come?
Well, I think it's going to play a significant role, especially Johannesburg being the key, one of the key places where the election is going to be quite important. I think right now, as been said by panels, South Africa is looking like a very great place to invest. So with next year coming about, if uncertainty is the only thing that I think is going to hurt us quite a bit, and right now it's a matter of should everything go smoothly, and also seeing what they're saying that they're going to achieve once they become elected. However, all in all, it does seem like locally the markets are still favorable, and I don't see it actually doing too much damage in the portfolios.
Wayne, to you. So you've seen many budget speeches and plans and the market movements around it. How do you rate this one? How does it compare to previous speeches, midterms, full national budget speeches?
Well, it's always nice to talk last because everyone's covered everything already, so I don't have to add much value. Look, I think a few points. First of all, you know, you sit and you listen to the budget and the medium-term budget going back over years and years, and you always feel quite comfortable when the budget is presented. But it never actually works out the way it was painted in the budget, except for this time. So this is definitively a step forward. It's you're on the right direction. There's still lots for the government to do, but debt is being stabilized. We're running a primary surplus. In other words, our income is greater than the expenditure if you ignore interest. So what that really means is ultimately you start to bring down your debt, not going up. Our debt was 27% of GDP in 2008. And every single budget year since 2008, the debt has gone up. I mean, we spoke now early on about debt being at 78%, so from 27 to 78. That's a big increase, but at least now it's stabilizing. Coming off the grey list is great. I don't think we're going to get a credit upgrade soon, but at least we've got positive outlooks. And, maybe if this does continue, we could get, some re-rating on our credit status, which will be extremely good news. But as mentioned in the actual budget, and as we've spoken about here, South Africa is a commodity producing country. We dig things out of the ground and we sell it. And that gives our economy the cycle it goes through. So we had a wonderful time, 2002 to 2008, massive growth in the Chinese economy, huge demand for commodities. I mean, we did so well, the economy grew so much, we ran out of electricity. But since then, we've been in a commodity down cycle. So whatever's happened to our country since 2010, we can't only blame on the government. We've been in a commodity down cycle, but that's showing green roots, green shoots now. It looks a lot better, and it will go down, but hopefully it does carry on for a little bit, because if it does, the outlook is better. It clearly is better. And I think the government of national unity is an extremely positive thing for the country. Albert Einstein said the definition of insanity is doing the same thing over and over again, but expecting a different result. In other words, the ANC government has governed the country for decades now, obviously, but they do the same thing over and over again, and unemployment doesn't come down, economic growth is not great. I think things are being tackled slightly differently under the new government of national unity, and also long may that continue.
Let's get to that economic growth and to the numbers. Annatjie, it's at 1.2%. That's the projection for 2025. It's a bit lower than expected from earlier this year. I think it was 1.4, 1.5%, but it's still double the growth of 2024. But it's not enough. They're only expecting 1.8 between 2026 and 2028. But is this nearly enough to boost our struggling economy?
No, it's not. We probably need between 2 and 3% to get rid of this huge unemployment problem that we are facing. But the thing is, South Africa is going through a revival, internal revival at the moment. And this has happened against the backdrop of a lot of uncertainty in the global economy. the shift in trade policies that not only affected South Africa, it also affected our largest trading partners like China. So China and the US only recently agreed to a trade truce, and that has affected the whole world who trades with China. So I think the pillars of growth for this economy will be the stability in the macroeconomy that's driven through structural reforms, the building a capable government with the help of Operation Rooyen, and also support for infrastructure investment. That is very important. That's where the growth will ultimately come from. The lower expected interest rates based on that lower inflation targets also very important, because that creates a foundation for economic growth. It helps not only government to reduce borrowing costs, it also filters through to households and companies, makes a huge improvement to debt sustainability. And it's also good for investor confidence. It brings in foreign capital. With this run in the precious metal prices, South Africa also saw an increased foreign exchange reserves balance, which is positive for the country. So, and I think the public-private partnerships have helped to create this primary surplus, and it will continue to do so. That, along with fiscal stability and consolidation and discipline, will carry that primary surplus into, like the minister has said, 2% by 2029, 2.5 or 2%. So everything is a step in the right direction. The path has been laid out. The important thing is the debt stabilization and the fact that borrowings are actually coming down. That's very positive. So all of this should lead to economic growth. And like Wayne, or I think it was Wayne who said, we don't know what's going to happen over the next year. If this commodity run still has legs, which it might very well have, and that revenue overrun goes to 100 billion by the time they announce the next budget, that definitely will lead to economic growth. Money will start pouring back into the country, especially the fact that, as Bianca said, we've been removed from the grey list. People will start trusting this government of national unity, and I don't think funding was ever a problem. It was trust. And I think that is changing. So I'm positive on the way forward. I think we've seen a lot of cleanup in the SOE governance, which is important. And I think the ratings agencies will also be reviewing that. So yes, all in all, I think we can easily get back to 2% growth.
That is very encouraging. Koketso, let's look at something that's less encouraging, and that is our unemployment numbers. It came out earlier this week. Yes, it is slightly better, but still quite devastating, especially in the youth category. So Annatjie has mentioned the infrastructure spending that they're planning, but we have been hearing many promises of various projects, but nothing of scale yet.
Certainly. And I guess, devastating is the right word to use for our unemployment numbers. And as you've rightfully said, I mean, we've seen a cyclical improvement in those numbers, but nothing structural quite yet. I mean, if you look at the absorption rate of about 40%, that's dismal. Underutilization of labor between 35 and 45%, depending on which measure you're looking at, is also still dismal. The most important number for me from those stats is, of the 8 million unemployed people in South Africa, nearly 80% of them have been in long-term unemployment. Imagine the sheer loss in economic potential. So that's something that we really need to work on. And I always like to say that Africa, as everybody knows, is a very young continent. And we have this population dividend that I just don't think we're making quite much use of in South Africa. So yes, the structural reform agenda is going to be very important to draw in the structural capacity related investments, which is what we eventually hope to get to. I think has already been mentioned that we don't just need capital flows, but we over time need these structural investments that mean capacity is being enhanced or reindustrialization is happening to such an extent that we need more people to drive economic growth, right? Not just, fixing rails and ports and the likes. So that's what we hope for over the longer term. But there are other things that I'd like to mention are going to be quite important here as well. The investment in SMMEs, which is something we in the banking sector, I'd like to mention FNB, are already doing. But there's definitely much more need for us to support and capacitate these SMMEs. They tend to be labor intensive. So that's something that we need to look at. The latest news from the NYDA, and I think the investment guys might have something to say on this. They just launched a 2.5 billion fund, right, to support SMMEs in key sectors and also try to drive in, employment. But we know, once again, the public sector cannot do it alone. They're relying on private savings, rather, to drive some of these funds. So it's still needs to be said that we need to build trust in public projects. We also need to build the transparency, accountability that I think the minister tried to speak to in yesterday's NTBPS. Now, I won't hog the mic, just a few more things from me. One more thing that I think, or a few more things that I think should happen is, obviously the recapacitation of the state has already been mentioned. In my mind, I mean, one good public sector worker can facilitate economic growth to the extent that it can enhance job creation for the rest of us. But a bad one might actually result in losses in jobs for many of us. So that's still something that really needs, undivided attention. Then a few more things is just two more things. One is going to be definitely when we think about reindustrialization, it has to be intentional, right? So we have to take people with us. If you are still not investing in high quality education that is going to prepare the youth for the jobs of the future, we're doing them a disservice, right? So think about AI. We know that we have public conversations around how to, moderate AI or have legislature policy frameworks towards AI. Private sector is already thinking about how do you enhance AI use in corporate settings. But when you think about AI preparedness, I mean, the latest research says South Africa is not quite there yet, right? 18% preparedness. So we still need to work on that. And the last thing from me is definitely going to be when we think about unemployment, we need to think about not only infrastructure investment, all of these social issues that I've spoken to. And I think Annatjie already touched on this. We need at least 3.5% growth over the longer term to actually start to see unemployment come down, because we have had population growth over time. And so more and more of the population is being left in the fringes of the economy. So those few issues really need to be addressed, Melissa, and it's going to take a bit of time. We first need to see the recapacitation of the state. We first need to see infrastructure investment to facilitate a conducive environment for the private sector to invest in structural, capacity enhancements. And then we start to see unemployment come down.
Now, quite a lot of policy reforms needed. Kearabilwe, do you think the GNU has succeeded in policy certainty in this midterm?
I think yes. I say that to say this. I mean, I think it was the continuation of status quo. I don't think there's been much deviation on any policy that the ANC has really ever implemented, because state recapitalization was an ANC policy. You come back to fixing the SOEs is still an ANC policy. Still, National Treasury has essentially directed all those policy reforms to essentially be there. So what the GNU has done for capital markets specifically is just give them more certainty to the fact that things are going to remain the way they are. They're not going to be true revolutionary or moves to the right or to the left. So the ANC has always been a centrist party. But I ask this as a concerned citizen and not an advisor of capital markets. Is that good enough? Because I sit here and I listen to Koki, and she's speaking about the most important part of where the South African economy is supposed to go, to reindustrialize. I mean, I look at something like the United States. The United States in market capitalization right now in one company, in NVIDIA, is 10 times our GDP. But what is the US president trying to do? Reindustrialize. And not reindustrialize into the fourth industrial revolution. He's actually going back, because he's looking at genuinely how do we get more people working. The US is almost at full employment, but is still looking for people to work. So now if we take the expanded definition of unemployment, there's actually more than 8 million people, close to 12.5 million people. How many net new jobs over the next 5 years would we have to generate just to get full employment into our country? Because I often say it's very nice to sit here in Sandton and drink coffee and everything else. There are 12.5 million South Africans who can't even afford food. And that for me is a concern, not just as a person who advises people where to put their money. It's a concern for my children, because one day when those people decide that they've had enough of the economic issue in South Africa, they are going to come here. And that is what we need to guard against. And if things are going to carry on the same way they have, we're going to be stuck with the same trajectory, because as long as we have a finance minister who goes, yeah, growth is not going to be that great, but yeah, we're fiscal discipline, the debt is consolidated, what's that really going to do for the man in the street? So I think the GNU has achieved what it had to achieve, achieved policy to certainty, but as a concerned citizen, what does that really do for me?
And in here, it's so important, the private-public partnerships and the private sector also stepping in, but also to what extent can they do that?
Without the state actually taking first. I mean, I look at, I mean, I'm an accountant who loves economic history. And for me, I always look back at why was South Africa so successful up until about the 2010s. And I go back to 1930, and that's to John Smart. I mean, yeah, it's still during apartheid and everything else, but there's a lot of lessons to be learned about economic industrialization at that time. And when John Smart went to get Dr. Hendrik van der Bijl from the US, his aim was to reindustrialize South Africa. And how did he achieve that? He said, we're going to build a state-owned enterprise with cheap electricity. He said, we're going to establish ISCOR for cheap steel. And looking since 1920, 2024 was the only year the JSE was not the best performing stock market in dollar terms. And I attribute it to the decision which was made in 1930 to reindustrialize South Africa. For me, what Koki said about reindustrialization is really what we can take from actually the analysis on this MTBPS.
Odwa, to you, what do you think will boost business confidence and also investor confidence?
I think we have definitely gone forward in that direction. Last year was we came from very low bottoms with, for example, being grey listed. The market wasn't performing too well. Platinum was struggling, platinum shares. So as now we're getting better. The fiscal responsibility. There wasn't much chaos with this budget speech as well. I do think that confidence, however, still touches on what Gea also spoke about, is the unfortunate result or situation which we are currently facing as a country with mass unemployment. Moving more towards absorbing more people, getting unemployment down significantly, not miracles at 3.5% that we're currently hoping for. The first step would then be starting to hit on firstly those numbers, which would get then looking around 2% would at least give us some hope for the right direction we're going into. That is on the economic side, and then as a whole, I think South Africa is benefiting as well from developed markets currently also fixing internal issues, and also giving us the now light in terms of investors looking at us for opportunities. So I do think that, especially with the past 2 weeks, getting off the grey listing and also yesterday's budget speech, I do think that we are starting to make a few steps in the right direction for business confidence with the GNU as well. However, again, I think executions is what's necessary right now. I don't think we're going to remain neutral until we start executing on our goals.
Bianca, sorry to next year. Well, hopefully Feb, we don't know. But next year's budget speech, what do you want to hear more about? What did you think is missing in the speech yesterday?
So we must remember that the midterm budget policy statement is not a policy setting environment. It's a yardstick. And I think sometimes we are very critical towards the government and saying, but where's the policy? That is not the intention in the midterm budget policy statement. Something that has, however, irked me a little bit is the lack of information coming out of this year's budget speech, going into the midterm budget speech, and then going into next year's budget. there's been a lot of talk about reforms and the what, but not really that much information on the how. How are we going to implement it? What timelines are we looking at? What is the cost of these reforms? Who are we getting involved? And that's been a little bit uncertain. And I think we would all like to know, yes, we are positive about the reforms, but tell us how you are going to do it. The second aspect for me was the lack of information on the debt restructure of Transnet. Transnet is one of the biggest fiscal risks for South Africa. And thus far, we haven't received any critical information on how that debt burden will be managed. It was mentioned in the February budget. It was highlighted as a critical element to address, but where are the details? The last element for me, and Koki touched on this, is we talk a lot about public-private partnerships. Currently, that is very centralized around infrastructure. As you mentioned, it hasn't really come to fruition yet. And yes, that takes time. But where's the focus on small, medium enterprises? Where's the focus on the rest of the economy? Because once again, we can't rely on a single industry to build the economy. And we can't rely just on private sector to build the economy. We also need to rely on the public sector. So how do we actually take the lazy cash that is sitting in private sector and implement it across the economy, not just centralized around infrastructure?
Thank you, Bianca. Wayne, you're up last again. So what advice would you give Minister Godongwana and his team? What do you think at the heart is truly needed for South Africa? And then we'll head over to questions for the panel.
I mean, everyone's spoken about this, and we've just about, I suppose, covered this, but I'd like to re-emphasize, when we talk about South Africa, we talk a lot about deficits. Our trade deficit, current account deficit, budget deficit. But the biggest deficit we've got is the deficit of trust. People don't want to invest money because they don't know what the future holds. So what the Government of National Unity has done, and what this mini budget has done, and the last budget, and hopefully the one in February as well, with the reforms that we've had, and we've only started on that road. There's still many, many reforms to come, and I'll come back to that. There's enhanced trust by overseas people in South Africa. You can look at the Rand. Local investors want to invest in South Africa. I mean, our stock market's done phenomenally well in the last year in dollar terms. So there is an increase in trust between the main parties, because you always felt that the government inherently mistrusted the private sector. All they wanted to do was legislate against the private sector. That, I think, is swinging, because that's what we need. I mean, we have many positive assets in South Africa. We've got an extremely well-funded pension system in South Africa. SA corporates are very successful in what they do, and they have an enormous amount of money, lazy money, sitting on the balance sheet. And corporates don't invest unless they see returns. They don't invest out of ethics. They see, can I forecast 20 years into the future? Because if I can, then I'm going to invest. Overseas investors also just go where the money is, where they're going to make a return. So you've got to make the environment attractive to capital. And if you do that, the capital actually does come. So all I can say to the government is, don't step off the path that you're on. It's always easy for politicians to take the populist route. But I think those days are possibly behind us now, because you simply cannot take that route because it is unaffordable. And that we see some true dent in our unemployment rate, and we see proper investment in the economy, investment in people, and just hopefully the commodity cycle stays with us for the next couple of years, which I think it will. And that, so it is actually a positive note.
Thank you so much, Wayne. So I'm going to give over to the audience to ask questions. Annatjie, how much time do we have for questions? 10 minutes. Anyone with a question, you can direct to a specific panelist. Hands. Thank you.
Hi, Jerome Smith, Regenesys Education. I just have a question. I've heard some very positive things about markets, about retail, about trade going forward. And I think it is positive for us because if you look back somewhere around 2018, 2019, when Gondwana had to basically lower cost and look at spending less to improve our economy, he's basically come to a point where he can say that he's achieved some of those goals. But my problem still lies with the South African household. Over the next year, it's clear there will be no interest rate cuts. And that will really affect the common man out in the street who has debt and now has to settle that debt at the high interest rates that they're paying right now. So my question is to any of the panelists who can help me out here, how can we better help the common citizen in South Africa? And more to that, shouldn't we also lean to what the US is doing is in tough times, issue stimulus checks to your public, issue stimulus checks to your citizens. Shouldn't we be looking at that? Thank you.
Who wants to answer that one?
I'll start off because I think I laid that impression in your mind, potentially, that we won't get any cuts in the next year. As per our expectations, we actually do see cuts coming through in 2026, right? The market consensus is March of 2026. We think maybe a little bit later, but that was before the announcement yesterday. And the announcement is important in several ways. Why? Treasury initially didn't seem like they were ready for the Reserve Bank to announce that 3% goal in July. So we saw a little bit of rebuttal coming from Treasury, but we were positively surprised that they were able to formally back the Reserve Bank yesterday. And it's so important for moral suasion, right? Because part of that inflation expectations guidance process is Treasury saying, we're also going to watch our books and make sure that we grow cost of goods and services in line with this new inflation target. Do we think that Eskom will next year ask for 3%? No, it'll be a process, right? But hopefully over the longer term, you start to see even public sector services, because that's mainly what's driving a lot of the inflationary pressure in the economy, start to move downward. And that will allow the Reserve Bank as a forward-looking MPC to already start implementing cuts, because they don't have to wait for inflation to be fully anchored at 3% before they start initiating those cuts. So I think that's just something that we also see coming through next year, and hopefully it lessens the burden on, you know, the average consumer. Do I think interest rates will move from being restrictive, or monetary policy will move from being restrictive to accommodative? Probably not, but we're moving in a line that we're probably going to see interest rates being less of a burden for economic activity, and hopefully that helps, right? So that's just one thing. And I think also lower inflation in general is very positive for consumers. Already when you look at wage expectations growth, for example, you will see that the average consumer should see their wages growing faster than inflation this year and next year. So hopefully that helps as well. Oh, the last thing, sorry. The last thing is, I mean, we think about this in two ways, right? We know that import price pressure has come down. It's a feature of your cheaper products from the East. Yes, it has implications for manufacturing here in South Africa, and hopefully we see that a lot of these manufacturers are going to onshore their production. But what we're already seeing is that the import bill has compressed significantly, right? We're getting cheaper products from the East, and hopefully that also lessens the burden in terms of consumer spending and their ability to spend on a broader spectrum of goods and services.
There's another question over there.
Yeah. Hi, good morning. So it's been very reassuring to hear that we're on a growth trajectory that is stable, that is positive. And we also know that the whole point around youth unemployment is something we have to crack. The state is making significant progress and investment in incentive type projects. We have a local election looming next year. We know that the private sector has come in a big way in Johannesburg to try and do its part. I think the overall kind of sentiment is positive. The question to the panel is really, if we accept the logic that it is the private sector that creates jobs, not the public sector, because we're not a socialist state, do we think that the private sector is doing a significant amount already to touch on to the, I think you called it lazy money. It's the first time I've heard the term, so interesting. So, is there more that can be done? And if so, what would you think those kinds of initiatives should be? Thanks.
I think the problem comes down to trust, as has been mentioned quite a few times. No business is going to put their money where they don't think it is safe. Yes, private sector is working in creating employment. They can't do it quick enough in a stagnant economy. And stagnation in the economy really comes down to policy. So it's really working hand in hand with public sector, getting those policy reforms so that private sector can optimally function. You cannot expect to tie private sector's hands behind their back and then look towards them and say, but why are you not creating jobs? Why are you not investing? The answer is very simple. You're not giving us an environment where we can grow, and we don't trust you.
Any more questions from the, we've got one there at the back. Oh, two.
Morning, everyone. It's Jonathan Campbell here. So I think touching on Bianca said, so I've got sort of two-part questions. So with inflation coming down at 3%, when do the cost of goods actually drop? And given that employers base wage increases on inflation, is this actually going to help the economy, given that we'll have lower wage increases going forward? Then secondly, how do we actually mobilize this lazy money? What policy reform do we need to get to that point? Because I think private sector is doing quite a bit to get what they need to get done. So what do we implement, what policies do we change, and how do we actually get this going?
Yeah, I think obviously we did mention that initially you will see some costs when it comes to, nominal, the nominal side of the economy. But I'd like to mention, as I already said, that, when you look at the multi-year wage agreements that have already been put on the table, those are 5%, 6%. So even if you have 3% inflation over this period, or at least an attempt to get there, it will mean that at least wages are still growing faster than inflation. But I think when we think about it, it's more of a clawback, right? We know that wages have been compressed in real terms over the post-pandemic period. So it's more of a clawback. What I think about the future is, yes, you probably won't see an economy that is driven by nominal GDP or the nominal side of the equation. But I think that's exactly where we need to go. We need to see real economic growth. We need to see more people getting jobs, and that allows more people to spend. So in aggregate terms, you should see that contributing to more robust economic activity. And I think the investment side probably gets a little bit more attention than the household side, because the wins there are more immediate, right? When you think about my returns and my willingness to invest in an economy that is low inflation is typically less volatile. So I think the stability side of the equation is probably more prominent, but the household sector is more of an aggregate, more people being drawn into the economy over time.
If I can quickly add to that, I think the reforms need to be sped up. It's been taking place way too slowly. So the reforms are enablers of long-term growth, but it's happening too slowly. So I think that is what we would advise government to do differently.
Then I think we've got time for one more question now.
Yeah. My name is Ndiadeva. I'm from the School of Economics. For me, the burning issue is high unemployment rates among the youth. And we know very well that this is due to the fact that, of course, there's skill mismatch. The skills that the young people have is not matching what the market needs. And the picture that has been provided is a very positive one, that economic growth will trickle down to employment. But my major question is, how do we ensure that this growth really reach the youth? Because the statements are bold, but the implementation plan in terms of what is the interaction between the education, industrial policy, how do we do that? Thank you.
I can be comfortable in telling you that GNU has no industrial policy. And that's the honest truth. And that's, you don't need to even look at it, because, and I can tell you why I say this, no industrial policy. It's because of policy non-coherence. Because I ask myself the question continuously, what policy is the private sector really against that is being implemented? Because you always hear that there's policy uncertainty, we need policy clearance, tell us the policy so that the government can change it. When you speak about industrial policy in South Africa, we have something which has done pretty well over time. And I go back to Tshwane. The Tshwane Special Economic Zone has led to major employment around different townships for young people. You go as far as the north of Pretoria, you get the Special Economic Zone in Rosslyn. You see BMW building the X3 there. You see Nissan there. You go into Silverton, you find Ford. You look at these special economic zones. What was the incentive for Ford to come here? Tax breaks and tax incentives. So now you go into other areas in South Africa. Why are there only a few? I mean, you could look at Kruger, East London. You look at Tshwane. Why aren't we setting up more special economic zones? Because of the fact that there's literally no industrial policy that the ANC has given us in 30 years. And for as long as there's no industrial policy, we'll always have the skills mismatch. Because at the end of the day, why are we building jobs when we know the majority of our population cannot match those skills? I said, let's go back in time. Let's not look to the future. What has worked for us has been to find low-skilled labor into low-skilled jobs. Why are we trying to redesign the economy to look for things in the future which might not even be competitive because there's not even tax breaks for innovation in the country? So now we come back to, why is there a skills mismatch? First of all, it's just history. And I mean, we can't ignore the fact that for the majority of part, most African people were just outside of great educational places. And then two, we got to a point where now there's privatization of education. I know you guys are in privatization of education and you're helping out a lot, but we need to look at the cost of education as well, because more entry to education means that we can reskill people. And I think over time, those are the public-private relationships that we actually need to look at, not how to build IPPs. We have enough base load. These are the ones which are going to drive economic inclusion and drive economic growth in the future. And I think it's the government looking and having policy mismatches and policy prioritization in looking at stuff like independent power producers instead of focusing on education. I mean, there's recent reform where even private education institutions can be recognized as university. I think that's a big leap. That allows people to go get education in that space. And you'll see that if those private public relationships get closed in, you'll probably see that trickle down effect to the youth.
Well, on that note, thank you so much all for your valuable comments and insights. Who do I hand over to now? Jeremy, back to you.
Thank you. Thank you very much indeed. You know, folks, I am very privileged to teach a course here at Regenesys on corporate media and management and strategy. And the one thing that I teach is if you want a really good panel discussion, you have to have drama, conflict, energy, and emotion and extremity. Thank you for giving us all of that, guys. That was really interesting. I've attended so many panel discussions in the past where it's dull and hot air. There was no hot air here. That was really great. And bless you all, none of you used the word silos. Thank God for that. Folks, on behalf of Regenesys and the Regenesys Investment Fund, we have a gift for all of you. Please make sure that you declare it, because we are an ethical organization. Okay. Ndrani, could I ask you maybe just to hand over? Okay. 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 So there we go. Should we start? Which side do you guys want to start? Okay.
Let's start with.
Let's go to Wayne at the other end there. Okay. There we go. Okay. Guys, you can only open the bottle of wine after lunch, eh? I'm watching all of you. Okay. Let's move on. There we go.
Bianca. Thank you. Very interesting. Some points of view, and we enjoyed the discussion with you.
Okay, who's next? Who's next? Okay, Koketso, you're next. So brace yourself for your gift. Brilliant, Koketso, thank you. Who's next? Odwa, you next. Yep. Okay, who do we have next there? Kia. Thank you. Kia, you win the prize for the best socks of the day. Show us your socks. He has no socks. Okay. Who have we got next? Okay, Melissa, thank you very much indeed. Well handled, was brilliant. Not grilling, it was a light saute, I think. Yeah, okay. And who's that? No, I did not for me. No. Okay, guys, I think, and for Annatjie, yeah. Annatjie, you get the organic packaging. Most unnecessary, but thank you. Thank you, Annatjie. Annatjie, why do you get different packaging? Or is this the budget? Okay, we've gone recycled. Fiscal discipline. Did you hear that? Okay, thanks everybody. Appreciate it. God bless you. Thank you. And Dr. Matka, would you like to just join us and say a few words in conclusion? And then, folks, once you're done, please join us outside for a cup of tea and a sandwich and some fruit, because we cater very well at this institution.
Thank you. Thank you, Jeremy. I really want to thank all of you panelists. I know your time is precious and expensive, and I know you didn't charge us for this event. I know we had to pay you a lot of money.
To the best of our knowledge, Mark.
No, I know we didn't. Yeah. So my accent comes from Croatia, those of you who don't know me. So we have a beautiful property on Croatian Adriatic coast. So you all, when you participate in these events, you get like 1 week free holiday at our property in Croatia. So please liaise with Annatjie, with your family. Okay. So thank you so much for your time, for your insights, for your knowledge, emotions. In my mind, I still have, some questions. I'm an entrepreneur. I'm not an economist. For me, entrepreneurship is about, competition and innovation, risk-taking. And entrepreneurship is the only solution to development of this country. We know, only through entrepreneurship we can create jobs and create economic development by developing small businesses. And my question is does this budget, medium-term budget statement, is it really going to help to create enabling environment for entrepreneurs, to create more entrepreneurs, to create more small businesses, create jobs, to create development? Is it really going to make difference? How different it is from previous years? Is it innovative enough? Is it creative enough? Is it radical enough? Because as an entrepreneur, I know to survive, we have to be innovative. We have to be risk-taking. We have to be creative. We have to be crazy and radical. And my question is this really recycling, previous year's budget? And I've said in many of these discussions, and how do we reconcile that need? Everyone said market needs stability, predictability, but to succeed, we need to be radical, we need to be innovative, we need to be different, because we as a country are competing against 200 other countries in the world, Are we radical enough? Are we innovative enough? Gentleman was talking about industrial policy. I agree with you completely. There's no industrial policy. If you look at the success of South Korea, and how they invested in car industry and Samsung and LG and those big, and many other examples, Singapore, and there was a strategy, there was a policy, there's a unity, there's mobility, there's hard work. And I don't know, do we have innovation in this country? Is this budget evolutionary? Do we need a revolutionary budget? Is it radical enough? Is it innovative? It's going to really change. I don't know. I don't think so, to be honest with you. But one thing I've learned in my life, we shouldn't really depend on government. We should not really ask what government can do for us. When I close my eyes and I look at, I came to South Africa 35 years ago, and I look at back, what happened in this country, and I feel like, ANC and freedom struggle fighters, after they achieved freedom, they've been partying and celebrating the victory, for too long, while country slowly was and still is in decline. It's unfortunate. I think we need to get a wake-up call and take some radical actions and radical changes. But can we expect that from politicians? Can we expect from Cyril Ramaphosa to be an entrepreneur, innovator, and to take radical decisions, and take risks in his life? No, I don't think we can. He's great at negotiations, certain things. So I'm rambling. But bottom line is, I think we need to take responsibility individually. The only thing we can really change is each one of us individually must take, responsibility. That's what we can change. And we shouldn't really expect much from government, including from, budget speeches and policies, because I don't think government is going to do it for us. We need people like Elon Musk, and some other famous, Saul Keltzers, and Johann Rupert's and Oppenheimer's and other great entrepreneurs that we had in this country, and many great entrepreneurs. They're the ones who will make a difference in economic development, job creation and prosperity of this country. So my invitation is to each one of you to take responsibility rather than blaming government, to take responsibility and take risks in our lives and to push our own boundaries. And just to remind you, which is something which is the Regenesys philosophy, that there is a potential in each one of us. There's a greatness, there's a great entrepreneur, there's a great leader, there's a Mandela in each one of us, there's Elon Musk in each one of us. We can make difference. So let's do our best, to make the difference rather than rely on government or external world. So yeah. So again, thank you to all of you inside and also online, and wish you all the best and good luck. Yeah, thank you.
Marco, thank you very much indeed. Just remember, we're all invited to Croatia in December. All of us, there's a chartered plane, Marco tells me, and we're leaving at 11 o'clock tomorrow morning. I'm very excited about that. I'm just kidding. If you could see the look on this man's face. All right, folks, tea outside. Panel members, please. Melissa, I know you need to go and do some interviews. So if you would follow her to the Nelson Mandela room, I know that you need to do that. Folks, what a pleasure it was to see all of you. We're going to do this again. And please enjoy a cup of tea outside. See you in Croatia.